Okay, we're live. Happy Wednesday, 2 week hiatus. Again, apologies everyone, I was on vacation. Back now into the gloomy Seattle weather and back with Brad. This is the second time I get to see you this week. Pretty cool stuff.
Very nice. Yeah, that was a lot of fun. Monday? Yeah, that was a lot
Yeah,
of fun.
Monday. Yeah, Monday was like, it seems like it was like forever ago, but um yeah, a lot of news while I was gone that we're gonna try and get into today. More so on your end, I think, versus mine, but um before we kind of get into that, yeah, just have you? Do you know how long? I guess let's wait until we get into this to your segment or to your slides or whatever. I don't really know the questions to ask. I kind of went in blind, but I did read a little bit about the lawsuits. I obviously like read quite a bit about the Fed and lowering rates, or actually not indicating future rate hikes for the near term. Um, and then employment kind of on last Friday it wasn't robust, but it wasn't like super bad. I don't think it was like recession kind of deals, but um, kind of on the financing side, it was good news all around, kind of in three. So that's really good, I think, for for your financing pocket and all that good stuff. So
Yeah, wasn't there a little dip in interest, like mortgage rates?
yeah, we had a little bit of a dip. I would say across the board, probably a 25 to 30 basis point, dip in the cost of your rate, which is great for borrowers. Obviously I don't really see a lot on the what is it, the value of the homes or whatnot, but I definitely did see a pretty aggressive dip in the cost of rates. So that was good. Really, really good. Excited to see that.
Yeah, we were due for some good news. So
Yeah. How's your week been?
it's been pretty good. It's been busy. I've been trying to just do some marketing stuff. I've two listings, and one of them I really thought was going to sell quickly, and I realized over the last week that we're in pretty stiff competition against new construction, and it's just so hard for if you have a home that's well a non-new home. For those that don't know, for
Yeah.
those of you watching who don't know, if it's not a new home, we call it a resale. And
Mhm.
it's very difficult for a resale to go up against the incentives that home builders are offering. And because a lot of them, like I had a client relocate here from out of state, and they got somewhere between $10,000 and $12,000 that they could use. I think they got a washer and dryer. I think they bought their rate down a little bit. So it was just, so it's hard for a resale to compete with that kind of money. And the
Mhm.
reason they're offering those incentives is when you've got, 8 builders in the area and they're all competing for the attention of the consumer, then they tend to offer these rates. It does, these incentives. So it's not a reflection on, oh, there's so many houses, they're trying to dump them. It's that they want you to buy theirs. So they offer, and in a lot of cases, they own their own finance company. So
Mhm.
when they do that, they know they're going to have that mortgage business. So they want to keep it all in house. So they offer these incentives um, to make it attractive to the consumer to choose them over another builder or over a resale. So been dealing with that. I did get an offer on one of my listings today and it's under contract. So that is great news. But so I'll just focus my attention on this other one and see if we can get going. But it's been busy, man. It's been nice. I sent
Yeah.
out you're on my email list. So I did
Mhm.
send out an email newsletter the 1st of November. So there's some good info there. And you mentioned you always like to take a look at the recipes that I include on there. So
It's a good, it's good stuff. It
it,
makes it, um, I think, especially on my end, it's a very bland kind of thing to talk about, right? Mortgage rates. Woohoo. At least a real or, real estate, you get to show like cool homes or like land, or this is what this is going for. So it pertains to people a little more. But that little itty bit of different, of unusual
non-business
stuff.
related, yeah, like attractions that are happening around town, things that,
Mhm.
so you're not, my hope is that people who receive my newsletter, which are usually like my sphere of influence, people I'm close to, past clients, potential future clients, hopefully they see value in that, and you're not just a number. I'm not just going to cram, real estate stuff down your throat.
Mhm.
I'm gonna share some other things. So yeah, it's hopefully get some. And I actually had a couple of people ask me what I do, so I'm going to be teaching a class at my office to other agents on how to do that email marketing stuff. So that'll be fun.
Cool.
How's your week been? Have you had well, hopefully, first of all, hopefully the vacation was relaxing and you had a good time.
Yeah, no, thanks for asking. It was hot. I didn't realize how how the sun in Mexico, it's like 30% humidity, but it's like, it's 85 degrees, but the sun, I mean, it felt like it was just followed me the whole time. I wouldn't say I got sunburnt, but I feel like I got blasted. Like it was really hot, and it was a different type of heat than the Philippines because it wasn't as humid. I don't know what I prefer more. I think my body likes the humidity. I get a little bit of that. Like the sun in Mexico reminds me a lot of Las Vegas, where it just hits you, kind of desert heat. But we're not right next to the ocean, so it was just really confusing for me. To put it blatantly, like, yeah, it was a great time. I was ready to come home. I think at one point, I think I've just been vacationed out, as that's even possible. But yeah, Mexico was great, man. I definitely can't wait to go back.
What
Uh,
part was it? What part of Mexico?
PV, Puerto Vallarta.
Okay,
Um, it's a little more expensive than I thought it was going to be, but I think it's just because we're in touristy kind
sure.
of Mexico. But the people are great. We were there for Day of the Dead and Halloween, so to see how different holidays are spent in different parts of the world is really cool too. The food was fantastic, as you can imagine.
Probably set the bar a little high when you get back home, trying to find something because what you thought was
Yeah,
Mexican food is really very different than what is authentic Mexican food.
yeah. It's just the way everything's prepared. It's the food's the same, right? Like, I mean, you can get a tortilla anywhere in the world, but like in Mexico, it's just they add a little more fat, or the bread is like just a little bit more. That it's that little difference that makes it a difference too. So
Right.
but yeah, it was a great time. I like I said, I can't wait to go back. I actually might be headed back for a cruise next August for my
Mm.
brother-in-law's 50th birthday. Happy birthday to him. So yeah, it was good, but like I said, I was kind of keeping tabs of like everything going on, like real estate, with the markets, with bonds, with collectibles. I couldn't get away from it. But it was a good vacation. I had a good time. So
That's good. Good.
yeah, yeah. Thanks for asking. But yeah, let's get into it. I know, before I go into the slides, I wanted to kind of highlight um, just some current market stuff as of today. I didn't really hear. I was really concerned lately about the Middle East stuff, not to get political or anything, but like a lot of investors were were a little bit worried. I mean, it's a part of the world that's very, if it's one of those, like, if one guy gets hit, another country has to intervene, and then a country intervenes, another one's, it's going to do this domino effect. And so I've been kind of nervous about it, actually, in regards to the markets. We had oil. Let's see, it's at $75 a barrel, but I was thinking, man, we may hit triple digits with the winter cold coming through. Demand, just normal demand, and then, like, if there's escalation of war, whether it be Ukraine and what's going on here in Israel and Gaza, I wouldn't have been shocked. But oddly, it's dropped quite a bit, and the markets have held up pretty okay. S&P's back up to 4,382. I think, but the last time we talked, it was around 4,100, kind of like that
Mhm.
that sweet spot I wanted it to be. But I think a lot of it has to do with here bonds. I mean, 2.61 on the 10-year bond, but more importantly, that affects both of us, is that more important 10-year yield is down 50 basis points since we had last had our show. That's an effect on borrowing costs and on everything else, and specifically homes, which is good for the consumer. I was amazed at how quickly it fell. Do you guys keep tabs on this, like from a realtor's perspective, or do you guys even care? I mean, I'm sure you guys care, but I mean, do you guys even like, you know?
I actually didn't know I needed to care until we started doing this podcast. And then
Oh,
I've been a little more, you opened my eyes to the importance of tracking it. And we do have, like, some of the people some of the lenders I work closely with, they will mention that stuff to us to let us know. Because I mean, since we've been doing this, we've just been yearning for some really positive news. You know, we really needed to hear something positive, and that was over 5 at one point, right? I mean, I remember every week we just watched it creep up when you would report on this stuff, and it was, you know, it was getting kind of scary there for a while.
yeah. Like you said, yeah, it did creep up around 5, and that's not a good sign for us, as it kind of is a big kind of like, you kind of shrug your shoulders and just kind of deal with it. But 4.5 still pretty high for for prices are at, but it's on the way down. I would still like to see the S&P 500. Maybe, I don't know if we'll get a Santa Claus rally or anything like that, but I think one focus that we've always talked about in the cost of real estate and all that is, one, I think what's really holding up on real estate is the rates, right? People, they're gonna not get out of a 3% mortgage rate they have for the next 25 to 30 years to buy a better home and use the equity, yada yada, and then have their their payment go up $1,400. This doesn't make any economical sense. The other thing too is, I mean, the jobs are still really prevalent. I mean, of course, I think for myself and for a lot of financial sector areas, like if you're not in healthcare, if you're in tech, you're still a little okay. But like if you're a recruiter, for example, or if you're any type of sales or marketing job, I mean, you're probably worried about your job, but we're not at that point yet. So if employment's still relatively high, people have equity in their homes, and they have a really low interest rate or none at all, doesn't really give them incentive to pack up and find a new house unless they really have to. Albeit there's still a market out there for people to buy homes because of the employment rate, and I think people are companies are starting to pay those good wages. But damn, it's hard to it's just so many those consistent things are still prevalent in both of our sectors. So
I think I've mentioned it here before, but I saw somewhere that there are more 30-year-olds right now than at any other time in the last several decades. And so, and I tell people all the time, the people who were my clients 2 years ago are probably not my clients now. It's going to be more like, I've been renting for, that the rent factor comes into play somewhat. So I've been renting and throwing my money away for so long. I want to start investing in myself and build some, build some equity and start, establishing yourself, because there's, I think that's one of the things that makes our country unique, is just the ability to, we're not, guaranteed to be homeowners, but we certainly have that opportunity to be homeowners. If we, you still got to make good financial decisions in order to get there. But if you do those things, then the opportunity is yours. So I try to look at a lot of that. We've had so much bad news. I try to look at a lot of those positive spin on what we're seeing and what we're hearing a lot of times.
Yeah, and I mean that's good. Like you have to look at the positives. Obviously address the negatives, but it's a lot easier to see the negatives in situations, right? Because it's more interesting, right? On our Discord chat that we have, and it's odd that no one's in our chat right now from the Discord, but because it was pretty, I mean, it got pretty hot and heavy like in that Discord a couple weeks ago, and there's a user in our Discord that was talking about the real estate market in Toronto or in Canada in general. And, they don't have 30-year mortgages in Canada. They have like 5-year terms. So typically, like, you always have to refinance unless you can pay your home off. Well, it's going to be a really, you know, it's going to be really fascinating to see all those like 5-year terms that are going to come up in the next 2 to 3 years. Like, what are those people going to do? I don't know enough about the mortgage industry in Canada to like really say, oh, it'll adjust, because it's all about, actual market demand and supply, right? So I can't say enough about my knowledge of real estate in Canada to speak on that, or I don't know if you do, but being in the US, like, we are pretty lucky to have the option of a 30-year, 40-year mortgage, and to that solidifies a portion of like cost for people, which I think is really good to keep the economy afloat, even if that mechanism that fuels growth into the economy is kind of stagnant at this point. And to hit on kind of like what you do, the easiest path to wealth in like the US or anywhere really is real estate. I mean, it's always, it may not go like this all the time, it may do these, but like compared to unless you're like a seasoned investor and really researching stuff, I mean, all you have to do is buy the house and live in it. It may be a long-term kind of like thing, but 9 times out of 10, US real estate's always going to go up. I mean, you could buy a place in Wisconsin, in the middle of winter, it's still going to increase in value. I know there's obviously like, there's obviously like exceptions to the rule, of course, but in general, I mean, you own that asset and it'll grow, so.
Yeah. And that's where one of my favorite slides that we shared was that, projected growth, where we took if your appreciation each year is 3 to 5%, split the difference and let's just call it 4% each year. That cuts right through those ups and downs, and that 4% kind of cut that it's even though you're going to have these, it's going to be a little bumpy in there, that 4% appreciation kind of cuts right through that. And it really is a good projection. And we look to see, because everybody, with the interest rates going up, everyone always looks back to the 80s as a time where, oh, well, interest rates were really high, but houses were not as expensive. But to see like the percentage of your income that was required in the 80s was much higher, even though the houses were less expensive, because your annual salary was not as high back then.
Mm-hmm.
We're living in a time where your annual salary is pretty good for most, for a lot of Americans. So back then it was like, I think it was 20%, as opposed to like, I think it's 7 or something. But that slide, we'll revisit that slide again sometime, because I just think it's good to keep that information out there. But just, yeah, if you consider, you buy a house and just estimate, it might be higher or lower in certain years, but that 3 to 5% is a pretty good gauge of what you can expect. And exactly like you said, that's a pretty generally it's a good path to wealth in America.
Yeah. And like kind of the chat got me a little excited, a few weeks ago when, people were talking about, oh, it's 2008 all over again. And, I kind of made 15 different bullet points of why it's not 2008. And the reason I kind of went into that was because not so much like, I just, like, I mean, do people wish it was 2008 again? Do you want like those signs of like multiple like for sales and like I'm unemployed and seeing people on the street that had good jobs and, and you can't just make those calls, right? I know history repeats itself, quote unquote, right? But like you can't just make those assumptions because of the changes of so rapidly done, but anyway.
Yeah, I like seeing that too. And I don't think it's wishful on the part of, I think people are seeing, because it's what the media presents.
Mm-hmm.
and we consume it as if it's gospel, the gospel truth.
Mm-hmm.
And you really have to do your own research and really understand. And with us doing this podcast and able to, I'm thankful that we can share, we don't have tens of thousands of people watching, but I'm thankful that we can share that with the people who do have questions and just provide that information. I get excited too because we've talked extensively about how this isn't the same scenario.
Yeah.
We can, in each of our industries, we can see that it's really, really different than it was back then.
Yeah, no, I mean 100%. It's and to share the information with like, people that, I think we generally just care about, like how people perceive that information. And here's another thing too, and this is a perfect example I'll get into in a second. We're not always right. I think I'm probably more incorrect than you on things that I
I
call
don't know
out.
about that.
But but at least I can explain to like where I made a mistake or something like that. So and it also makes sense in a second here. But so for our show this week, November 8th, 2023, Wednesday, I haven't really talked about earnings reports like as they are reported and kind of the reaction and kind of like, what I see is good and bad or whatever. So I wanted to get into three to four stocks that I had on my agenda today. And then obviously our West Coast real estate, I changed it up a little bit based off my vacation. I don't know if you saw that, Brad, but I thought that was kind of cool and all that good stuff. Sorry, I wasn't able to update this part, but we are talking about Brad's The More You Know, and more so in the lawsuit, that $1 billion lawsuit that hit the realtors. I'll let you kind of get into that, in the next couple slides or whatever. So
yeah, you definitely threw me a curve on your the home that you featured this time.
Well, I don't know what happened with my slides, but the pictures aren't showing up. But that's okay. I think the 5 people in the stream don't mind all that much. Sorry, Michael, what's going on? Long time, no see, man. Yeah, 5 o'clock Pacific. I don't. I had a little issue with not issue, but miscommunication with Fedora on that earlier as well. And then Wade, you are always ready for whatever it may be.
He's down for whatever.
He's
Good
down for whatever. That was a typo. That was a typo.
Yeah.
Never
Okay.
mind.
Good.
Never mind.
Good.
Never mind.
Good to see Michael and Wade.
Yeah, it's been a while with those two gentlemen, and the other people that are in the broadcast. Thanks so much for liking, subscribing, and supporting us. No matter if we get 5 people in the chat or 500, I think it feels good to do this every week or every other week or however we're going to do it, and just communicate with the people.
And the good news is, if you miss it live, it's out there to watch at your leisure. So definitely check out our YouTube channel and like and subscribe and all that good stuff. And we'll keep you up to date.
For sure. Yeah, again, sorry, my pictures aren't showing up here, but DataDog is the first company I want to talk about. If you don't know what DataDog is, it's a monitoring and analytics tool. So it's a service as a software type business that they do like metric performance. They determine performance metrics throughout, like, let's say you need their software to find out when your employees are most productive at a certain point, or when you guys get stuff done at a company. You can use DataDog software to help you out with that, and basically monitor servers and databases. That's how they gather their info, and then they report it to the company. Very important in today's metrics, I think, especially with it's kind of like a consulting type of software, right? They beat on earnings by 33% here, revenue 4.5%. They did really well, and I'm trying to see if I can get stock price. So it was $99.99 today. However, this stock was up 20% on the beat and on the raise in guidance for the upcoming quarter or so. So when you hear about a company beating guidance and then raising it, right, it's kind of like a basketball player. You're expecting, I'm gonna shout out to Oklahoma City, Chet Holmgren. The expectations for his points per game or like 18 points a game going into the season, right? But he's actually scoring 25 points per game. And he's projected to score even more as the season continues, right? So the value of his expectation is higher, and so more people are going to be tuned in to into Chet Holmgren as he progresses his career. Same with a company, right? And yeah, Chet, man, he's a freaking baller, man. Chet is big for sure. He's tight.
Well, it raises the floor
Mm-hmm.
and it raises the ceiling.
Yeah, exactly.
Yeah. So you're, the baseline is higher and the potential is vastly greater than what you anticipated too. So that's
Exactly.
good news.
Yeah.
It sounds like a really important company.
Yeah, and the other thing too is like, okay, so you see here they were 80 bucks a share. They shot up all the way to 103 last week, or sorry, this past yesterday.
Was that based on earnings? Was it?
That was based their earnings report was a couple of days ago. So yes, that was based on earnings. So DataDog, what that tells me about the company is doing great. I don't know if it's a buy here, but like obviously they're beating expectations for the upcoming quarter. What it also tells me is that tech is doing two things, in my opinion. One, they need software to keep their business going, but then they also need software to help them figure out where are we lacking or where can we make cuts, because maybe this sector of our company is 80% of our revenue, and this other 20% where our metrics aren't very good, we could afford to get rid of them, right? So this is a pretty important company in an economy like we have today with rising rates and all that stuff, right?
Just operate more efficiently,
Exactly. It's an efficiency type of company, and it's tech. So they just farm the data and tell you what it is, and it's it shows in the earnings report that this past quarter a lot of companies like used their service to help companies kind of thrive. I just thought it was a really good indicator for tech, if you're in a tech kind of a company. Have you ever heard of this company before or no?
I haven't, but it makes a ton of sense, and that's that shelf. I mean, just when they announce earning reports and it exceeds, and all of a sudden it's a vertical ascension to their gains and stuff. I mean, that's really interesting to see.
Yeah, no, it's good stuff. Obviously this is only like a no, I invest in comics. Obviously this is like only a 5-day chart, to see the whole pie. I don't really get into that because we may go overboard, but just want to show that difference in earnings can really, help a company out. My next company I'm going to talk about here, I'm sure a lot of you know this company. It's Uber. They just had their earnings come out a couple days ago as well. Let me pump over to this, but before I go to that, so let's see here. Earnings were good enough for the stock to join the S&P 500, which is a really good thing. Now, when a stock joins a huge index, that's always a buy for the company, because now money managers say, they'll pitch to like a prospective client. They'll say, as a money manager, I will have every single stock in the S&P 500. Well, if a company joins that particular index, money managers are forced to buy that stock up, and so it increases the demand for the stock, which is good. You want that. As far as their earnings were, earnings per share was a beat by 7.5%. Not crazy great, but it's good enough. They did miss on revenues of 2.6%. So, maybe they didn't get enough rebounds this past earnings, but that's okay. And let's see how the stock performed. Well, didn't go up a ton, but it did go up a little bit the past week or so. It's kind of floundering, in that $40 to $50 range here. But I think with Uber, people always think of it as a rideshare type of company. But man, I tell you, man, they're really expanding their base to partnering with not just like food places where you can do Uber Eats, but my wife, for example, she gets deals for our cat food off Uber. And
Hmm.
so we'll get a coupon for like 15 to 20% off, like, or, buy 12, get 4 free. And it's delivered to us. And they waive the fee. I don't know exactly how that works. I know it's like a deal with PetSmart or whatever company it is. But it's just kind of those little things that'll add to like the revenue stream. And then they still are 1099ing their drivers. So the drivers are independent contractors. So they don't have to worry about a huge cost to have to pay like health insurance and all that. It's up to debate, right? That's kind of more of a corporate, like, I don't know, practice or whatever. But the drivers don't care. I mean, like, they can kind of independently work however they want to work. So
Very
it's
flexible schedule, so they
yeah,
can hop in and hop out whenever they and there's not expectations, so they kind of keep track of, all right, these are the peak hours I need to be available to work. And
yeah,
so you might be able to, I get to take my kids to school and pick them up from school or whatever, because you
exactly.
have a flexible schedule there.
And I could totally see them partnering with like Amazon or like Walmart to kind of compete for that same day delivery space. Or I don't think it get bought out, but um I mean, the next 5 to 10 years I think this company is still great. It's kind of the PayPal of like commerce, in my opinion. They're kind of the middleman, and you don't have to worry about like, driving the stuff around.
They're
Um,
becoming the Kleenex or the Coke or the
yeah.
Q-tip, or those names that you think of when you think of a product. Their name is what you call that product.
Hmm.
And hey, I'm gonna grab an Uber. I mean, it's,
Yeah.
and whether you Uber or Lyft, you just kind of call it, I'm gonna grab an Uber.
Yeah.
And so they're that name recognition is, I would imagine, benefits them as well.
Yeah, and Datadog, obviously, like I asked you, and you're like, I've never heard of this company before. So I kind of want to get into another company that people, know of, and it could kind of explain it a little better. And yeah, I mean, like, people in the chat, like, a lot of these companies, like, you follow one company, and you go through a branch, you go to the next one, and then whatever. And that's just how you kind of find out about these random companies, because you find out what works for you. Um, and then sometimes you find companies that, God, this is not working for me, and you just gotta cut your losses and peace out. And I talked about this company for a long time, and it's so disappointing to me. I would call this one of the COVID darlings for sure, along with GameStop and along with, oh gosh, uh, GameStop, AMC. This is one of those darling stocks that everyone thought was going to be the next Tesla killer, and that's Lucid. Lucid Group. They are the makers of the most unsellable electric car of all time. And the sad thing about this, okay, so my whole theory on this company was that their technology was more superior, and that would kind of that would allow them to sell that technology to like a Ford or to Ferrari or to another like big company, and they would just kind of get the residuals from that. Um, the second that they announced they would commingle with Tesla superchargers, I was like, I'm out. The story just stopped there, because they were trying to, I wouldn't say like take over Tesla, but basically be like the alternate kind of like decision over a Tesla. I think they have a great quality product, but for many, many quarters, their CEO just kind of execute. It's just like the Mariners. They made the playoffs 1 year out of 9 and keep making these promises. And here we are. They keep raising prices and doing all this stuff to us, but they can't deliver. Um, they missed on every single ratio you can think of. Uh, let's see here. So they missed on, supposedly they beat on earnings per share, but they're still losing 330,000 per car or whatever it is. Revenue was a huge miss, double digits. I mean, look at this. That's 3 quarters in a row they missed huge on revenues. The big thing with Lucid is, and this is with cars in general, they projected to deliver 10,000 cars this past quarter, and they only were able to deliver 8,000. Doesn't sound like a lot, but when you miss deliveries, especially if you're a car company, quarter after quarter after quarter, what that means is you have an efficiency problem. It means that, you know, you don't know how to run your company essentially, and or that your things that you just don't know how to deliver. And they have a new COO. I mean, it's been like their fourth one the past like 6 years or whatever it is. The stock was at like $65 a share during the pandemic and then bounced back up because the Saudi investment fund was pumping money into it. They're just trying to be a vertical integrated company, and they only have a year left of cash at the route they're going. That's what really concerned me. The CEO came out and said we're going to spend about $1 billion to, upgrade our facilities and help with like production, all that. Well, they have about 1.14 in the bank right now. So in an economy where rates 10 years at 4.5%, where, people are worried about losing their job, they're not going to spend $77,000 on a car company that may not exist in a year, right? My theory changed with Lucid, and so I got out at a loss and just, whatever, it's no big deal, I guess, whatever. But it's definitely deflating for sure.
I hate it for you because that was one of our earlier shows that you mentioned them, and so that's disheartening. And I remember you just said it again, but I'd remembered that you said they had some oil money backing their endeavor, and I don't understand how you can't figure that out. I mean, it seems like most companies, finding the money is the tough part. But if you've got that, then that tells you it's, is it ownership? Is it like, who's leading the company?
It's really tough. It was a tough call to make too, but I was just getting sick of it. And, you kind of have to reassess each time, right? Your stuff, but it's cool. It's all right, because this guy, the Real, which I've talked about numerous times, they are an online what is pink cherry? What does that mean? I don't know what that means. Wait,
it's got to be a joke.
Okay,
there's no way it's not a joke.
Hey, who knows, right? I mean, DataDog, that's kind of a funny name.
Don't Google it. Whatever you do,
do not Google it. Do not share screen. Don't do anything. But the Real is an online consignment company. They hit on every single metric this past week, up 24% today alone. This is up to $2.20 at one point. It's come down quite a bit from its recent highs, though. So, like, we were here around 285. The stock was doing really well in September, but it dipped here. And this is where you can find buying opportunities. Well, right about here, there was news that the CFO left. And now when a CFO leaves a company, there's like worry that, oh, shoot, financials are bad. I'm not going to repeat that, Wade, but you can do that on your own kind of thing. That's all good. Anyway, I lost my train of thought. But
so they were worried that something's going down.
Something's going down with the ship, right? Because CFOs just don't leave. If they leave, they may have messed up on reporting, or they see something that's going to be bad. I don't know what the actual reason he or she left, but I said, you know what? It's $2 stock. If the earnings come out and they're bad, I can just sell at a loss and just take the capital tax write-off. However, as you can see here, they not only have gone past the area of when the CFO left, but they've exceeded expectations past there, and it's kind of on this trajectory, right? This stock, when it came out on IPO many years ago, was at like, $27.41 during the pandemic boom. Or actually, it came out back here. But during the pandemic, it was at $30 a share almost, right? Since then, I mean, this company's done pretty well as far as being conservative and expanding the company. You can actually go on this website called The Real and buy comic books and sports cards. They're a little bit overpriced a little bit, but they're consignment companies, so you can always negotiate. It might be an untapped market for us comic book collectors out there. but always ways to expand the revenue stream for this company. I think with people being a little more conservative in the pocket and wanting to spend not as much money on like luxury consignment, this is a great company to be part of or to invest in, because people are still going to want to buy nice stuff, right? It's Christmas season's coming up. You have parties. You can rent like dresses to go out to parties and stuff. So again, that's just more money in the bank for Real. And the fact that they performed in a declining market, I mean, tells me it's a good company to own. And at $2 a share, Brad, I mean, you just throw, take your monthly comic or weekly comic book like expenses and throw in a couple shares of buying this stock.
And just track it and see what happens. Yeah, that's very reasonable.
Yeah, $2 a share. It's not one of those $2 shares that like, is like, oh, we're the next like, I don't know, we got the next like semiconductor type of thing. I mean, this is a real company you can actually go to and look at and check it out. So anyway, that was my stock reports for the day. So I hope you enjoyed it.
Well, you had more hits than misses, so that's a good thing.
Yeah, thanks, man. West Coast Real Estate. If you guys are still watching, I want to thank the 7 Live. Please hit that like, subscribe, tell your friends. When we hit 75, we'll do a giveaway, I think. But until then, I do appreciate everyone's support. I know Brad does as well, and we'll keep it going. So based off, I had kind of a weird thing this week. I was telling my wife, so I'm 41. I know that's not like super young. I know it's not super old, but I kind of think of it the midpoint, part of my life, right? And my dad's 87, he'll be 88 this year. And I thought like, man, if he stayed here, he was really at risk of like having to go to a nursing home or, just some type of assisted living type deal. And that's really expensive to do here in the US. In the Philippines, you can have literally like you can hire a nurse or some type of helper to, assist with your medication, basically a personal assistant, but like more medical, like kind of like oriented, help you down the stairs, that type of thing for like $100 a month, depending on where you live. Right. So that's a lot more affordable for my dad to kind of live the rest of his days, or if he wants to come back, it's fine. But, at least he kind of has that in his back pocket in case it has to happen. So I thought, man, I wonder if Mexico or like Costa Rica, places I've been that I wouldn't mind living my twilight years out, like, would it be feasible to, 1, purchase real estate there? And then 2, if it is, then look into the medical parts. I didn't really look into the medical parts of Mexico, but the medicine there was a lot less expensive than it is here. I'll just say that. So my pick for the West Coast real estate today was a little 5-bedroom, 3-bath in PV or Puerto Vallarta for $220,000. Now, this doesn't have a view of the water. It's a little bit further away. It's like in the kind of green mountain area, hills or whatever. But man, 5-bedroom, 3-bath. I took one interior shot. There's like 60 shots of this house. That's a pretty damn good deal for 80-degree weather every day. And I don't know, 5-bedroom, 3-bath here. I don't even want to get into that. What do you think of this pick?
I think that's really cool. I think you should buy it and then we'll just like pick one day a year where we go hang out there.
Okay, that's
like
cool.
1 week, like a weekend a year, or 1 week. We'll just go for a week and just hang out, kind of chip in. It's like having your own Airbnb or something in Mexico.
Yeah,
You're very inquisitive. Like I could see you sitting down there sipping on a margarita and thinking like, I wonder what real estate's like here, and start looking stuff up to see what you can find down there.
Was kind of the reason I was looking it up is because, okay, have you ever been to Mexico before?
Yeah.
Okay.
I went to Cabo. I went to Cabo a few years back.
I don't know if it's the same in Cabo. We're actually going to Cabo, I think, either next year or the year after. But in PV, you get off your plane and you're walking towards like the taxi area, and there's all these people with like either like signs or just whatever, and there's all these other people kind of behind like a counter, and they're offering you free tequila and like all this alcohol.
The wifey's selling on
Yeah,
you.
yeah. She's hating on me. They're super nice, and they're like, "Oh, do you need a ride to your hotel?" And we're like, "Yeah." So like we go over there, and I'm thinking it looks like kind of like a rental kind of car deal, and they're trying to sell you like a free meal, and I'm like, "What's the catch?" And like, "Oh, you just have to meet with one of my friends who's doing timeshares." I was like, "Oh God, like freaking timeshares? Are you serious?" And I mean, we had a 5-hour flight, which wasn't too bad, but like I was ready to get like my flip flops on. I'm like hot as
Sure.
hell, like I just want to get out of here. But then it made me think like, I guess it wouldn't be too bad of an idea to get a timeshare if I was going to come here like every other year or like share it with family and all that stuff. But then I thought to myself, why would I get a timeshare? Why don't I just like get a house? And so I don't know if PV would be the place I would pick, but I was definitely curious of because I think the population of Americans that live in PV is like 30,000 out of 600,000. So not a huge amount, but like that's a pretty fair amount. And there's a lot of retired people that go there back and forth, back and forth, back and forth. But anyway, that was kind of my motivation for this pick.
So the next few weeks we can pretty much count on you picking a different city in Mexico and finding a great deal on real estate.
I mean,
Just feature one for the next 5 or 6 shows, and
yeah.
we'll pick which one we like. I thought when you started talking and you said, I'm 41, it's not super old and it's not super young, I thought you were going to say that you bought a Harley.
Oh, no, oh
Like
man.
midlife crisis thing or something.
No, you can find me. You can find me on a Harley, man, or a motorcycle. Like, I mean, I admire the dudes that like ride those things. And they're really cool, but man, I'm way too afraid I'd bust my head or
Me
like,
too.
all that stuff.
Well,
But
they say like you have to watch out for all the other people. It's not you.
sure,
You can be as safe as you want to be. You just have to trust that everybody else is paying attention, not
right.
texting while they're driving down the road and that kind of stuff.
Yeah. But anyway, I thought that was kind of cool. There were other like condos for like 500K, but it had a beautiful view of the water, and I was just like, man, like I don't think I could spend that much even for that view. I mean, just give me a 10-minute cab ride. I can go down there. It's fine. But
Start gathering up those slabs, man, and get your down payment ready. And
yeah, I know. It's either land over in Prosser or this 5-bedroom, 3-bath in PV. So who knows?
you got something brewing here. You've got a couple of really good investment opportunities before you in real estate for sure. From what I've seen.
Well, I hope so, man. I hope so. Let's see what you got.
Well, since I couldn't compare, I just figured I would feature my listing I'm trying to sell, which is in
Oh, cool.
the town that I went to school in, just outside of Columbia. 3 bedrooms, 2.5 baths, 1 car garage. Got a really nice deck on the back, fenced in, privacy fence in the yard. But if you look, I added an extra photo. That's actually the property. It's over an acre.
Yeah.
And it's all wooded, and just very, really private. So I was kind of shocked it hasn't sold yet, because they would put 2 more houses on that.
Yeah.
Nowadays they put 2 more houses on that lot. They would probably, if you see the at the very back of the property, the line where it meets the other property,
Mm-hmm.
in neighborhoods now, they'll put a cul-de-sac up in there and put houses
Right.
all around that cul-de-sac. So
Sure.
it's really unique, and I've got any day now. I expect it to go under contract, but I just figured I would feature this. It's a really cute house and a great first time home buyer house. It's not Mexico, but you do have some elbow room, which is kind of hard to find nowadays. So
Yeah, that's great. I think that opportunity, like South Carolina real estate, it's I keep thinking of this in the back of my head, especially that you talk about it more, and I just so happen to like look it up every once in a while. Like the definite, not only the price, but the definite like space, I think is a big attraction to people that are wanting that on the East Coast, I would assume. I have my aunt lives in New Jersey, and she has a fairly like pretty big house. And
Are they the
they're
ones that go to Myrtle Beach, South Carolina on
yeah, those are
occasion?
the ones. Yeah, those are the ones. Yeah. Uh, and she has a backyard, but it's one of those like everyone kind of shares the backyard. It's just
Mm.
like green. Um, and it's cool, but it's shared with other people. I mean, this isn't obviously. I mean, this is your land. This is your land, kind of thing. And then my cousin, she has a townhouse, a brick townhouse, and her backyard's not very, and it's a townhome, so she's kind of limited to how big of her backyard is. But she's like, that's okay because I don't want to deal with the backyard, So
Sure. Don't cut the grass and all that. Yeah,
yeah,
you're usually looking for lower maintenance in those situations.
yeah. So I know you even got the Clemson little paw there. I
Yeah,
see.
well that just shows that when you're a good real estate agent, you don't let rivalries
Ah,
influence your decisions. So they're I helped them buy this house 8 years ago, and
mhm,
now so it's really nice that we've kept in touch. We've become friends. They're not, they know they're not just a number to me.
mhm, mhm.
They've they get birthday cards from me. They get Christmas cards, and so I've kept in touch. And they've sent me other people to work with, which is flattering and humbling. And so I'm thankful to have this opportunity with them now that they're in the next phase of their life.
Mhm.
They're hooking up with me again, so I appreciate them very much.
Very cool. Well, Brad, before you get to your part, I thought and I've kind of gone back to this, in the past. But Warren Buffett has a ton of cash. He's sitting on like 189 billion on Berkshire Hathaway. And monthly, it's like I think he net, I don't know the exact amount. But it's a considerable amount, and he's just sitting back because he has a lot of his money tied into 2-year bills, um, which the government pays him out, monthly. So is it worth it to use Credit Karma? 100%. I think it is. The one thing about Credit Karma though is the credit scores are only good for consumer products. Now, if it's a mortgage or a car, it's your credit score is going to differ a little bit. So just keep that in mind. But 100%, I am a big purveyor of Credit Karma. They are not sponsoring our channel. I don't
Yet
know why they wouldn't, but but no, Credit Karma
they send
definitely.
them this clip this portion, send it to them, and we'll see if we can get us some. Hey, we start getting sponsored by people like Credit Karma and places like that. We will have money for that house in Puerto Vallarta in no time.
we'll
So
call it the sunset. We'll call it the sunset to South House. That'd
there
be
you
kind of
go.
cool.
I knew this was going to pay off. I knew this podcast
One
was going to
day,
pay
one
off for us.
day. How hilarious would that be, man? I love it. Um, but yeah, like Warren Buffett is just, he literally doesn't have to do anything except for live, and he's getting paid for it by the U.S. government. He's just a smart man. I mean, like he doesn't. If you look at his top 10 holdings, I've heard of every single company he's invested in. And he beats the S&P 500 every year. Um, but it got me to thinking, like, okay, so I'm not Warren Buffett. I'm not, I don't ever will be. I don't expect to be. But how can I garner my finances or help the community garner their finances like him? So I looked at some CDs, and I saw like typically people think, oh, a CD is like a 2-year kind of commitment, right? But you can either buy. I saw companies, and you guys can DM me if you want to know what companies they are. I don't want to put them on here because just my affiliation stuff, but there's like 6-month, 3-month, 9-month CDs you can invest in and get like 5% return on that. If you're the type of person that's pretty conservative, or you just want to have your money work for you versus getting like 0.25 on some like lame FDIC account, why not just put it in a 6 to 9 month CD, whether it be $500 or 10,000, whatever it is, because you're just not really sure on what to invest in. It's a no-brainer, really. Your investment is protected by up to $250,000 because of FDIC insurance. So I mean, you're not putting $250,000 or more into a CD, I hope. But 5 to 10,000 or like 100. I think it's a really good idea. If you're able to invest in 2 to 3 year treasuries by some type of index fund, I think that's a good investment as well. It's very, very conservative because it's backed by the U.S. government. And it just kind of got me thinking, like, man, sometimes you gotta don't complicate things, man. Just like put your money in a CD and or put 10% of your money in a CD, and you're guaranteed 5 to 6%.
What if you took your tax returns? You get tax returns back each year. What if you took that and just dropped it in a 6-month or something?
Yeah, why not? It's
if
not
you
a bad
don't,
idea.
yeah, just earn a little more from the government. I like that. That's cool.
Yeah. So just and I've talked about that before in the past, but it just that's the proof, right? I mean, Warren Buffett isn't buying anything right now. He's just like, screw it. I'm just gonna why not? Why mess up a good thing, So anyway. And Brad, the more you know.
This is some really I really dug into this, and so we'll start off by explaining. So we had a team meeting on Tuesday at our office, and when oh look, Danielle's here. What's going on? Good to see you again. Danielle. So we had a team meeting, and we got into this a little bit just to, you need to be informed whenever you're discussing stuff like this. And it was the quietest I heard the conference room when this was going on. Everybody was just quiet and listening to hear what was said. But so it's the Sitzer Burnett. It was a trial, a realtor commission trial, a civil suit that was brought against the National Association of Realtors and several several brokerages, real estate brokerages, Home Services of America, Keller Williams. So the jury found that National Association of Realtors, Home Services of America, and Keller Williams were guilty of colluding to inflate or maintain high commission rates through NAR's clear cooperation rule in the Sitzer Burnett buyer broker commission lawsuit. The defendants must pay $1.78 billion in damages. Now, that number was closer to the jury asked. They're allowed to damages can be 3 times the amount that is. So it's closer. It's like over 5 billion actually. So they took that 1.78 and multiplied it by 3. So it's in the $5 billion range. To me, collusion is strong wording, but that was the reason the civil suit was brought. So I thought, okay, let's dig into this a little bit and figure out. One, I wanted to look at how did we get to where we are now. So the next slide, we'll talk a little bit about buyer agency and just kind of give a history of it. So, and I've tried to put these comments on individual slides just so it's easier to digest. So I've got as many slides as I've ever used for my segment. But in 1983, a Federal Trade Commission study revealed that more than 72% of home buyers in the United States mistakenly believed that the agent showing them homes represented their interests. As a result, laws requiring agents to disclose whom they actually represent have been passed across the country. So we'll dig a little deeper, but so 72% of home buyers in 1983 thought that the agent that was showing them the house represented them. So if you'll go to the next slide, please. In most U.S. states and Canadian provinces until the 1990s, buyers who worked with an agent of a real estate broker in finding a house were customers, not clients. So there's a difference in responsibility on the part of the agent. So they were customers, not clients of the brokerage, since by most common law of most states at the time, the broker represented only sellers. So up to the 1990s, this brokers represented only the sellers of property, and buyers would contact the broker representing that seller and, hey, I want to see that house. So it is only since the early 1990s that states passed statute law to create buyer's agency. So were you familiar with any of that? I mean, I've been in real estate for 10 years, but I did not practice real estate at the time. So I was not familiar with a lot of the history behind how buyer agency came about. But it looks like, if brokers only represented sellers, there was some deficiency in the system.
Sure.
So if you go, and if you have questions, jump in. I'll ask you, some things, but if you think of something, jump in and feel free to ask. So buyer agency is now as common as the traditional agency relationship, providing the buyer with the same level of representation that was previously available only to sellers. And it kind of blows my mind that there would be a system in place where buyers, you're making the biggest purchase of your life, and you wouldn't have some form of representation to kind of look out for you, have somebody in your corner looking out for you as you go through this process.
Sure.
So yeah, up until that point, they only represented sellers. So you can pop over to the next slide, please.
Weird.
Yeah, it's wild, isn't it? I mean, it seems crazy that that was the case. So it originated in part because of a growing awareness of consumer rights, the need to know just what was behind every deal. Part of the reason for all right, so this article, I actually pulled this snippet of information, a little shout out to I think it was the New York Times I pulled this from, a New York Times article from 1993. So it's the reason why I've added, it was worded as it was happening in 1993, as buyer agency was coming into existence. The New York Times reported it. So I've added, that's what my parentheses is. I've adapted it to, as we're reflecting back to that original article. So it originated in part because of a growing awareness of consumer rights, the need to know just what was behind every deal, which is, as a buyer, I would like to know what's going on, the undercurrent of what, I'm making the biggest purchase of my life. I would really like to know that what's going on. So part of the reason for the initial slow movement, and by slow movement, I mean to adopt buyer agency, was opposition by many traditional brokers who feared that the new method, implementing buyer agency, would drive down commissions. At the time, and I've talked to several people who were agents at the time, they're around 7% at that time. So
wow.
So they're listing at 7% and representing the seller, and you just have these customers, buyer customers coming in and making these purchases. So that listing agent was getting that full 7% then.
Wow.
So blew my mind, man. I mean, it was, and it's, as I read this and as I created these slides, I was like, it didn't really seem fair that that was taking place, and that's the reason they implemented a lot of these things. So
Sure.
anything jump out to you or questions you have as I share this stuff?
No, I mean, just like my normal, like the homes that I have purchased and sold, like when you're talking with like said realtor, that guy's representing you. Like I would represent a client of mine. So, like realtors will send, they'll give you this big, like, kind of like pamphlet that like basically says like you won't go to another realtor or shop around. And it's like I'm not gonna read the whole thing, but like, and I chose you, so it's like, yes, of course I'm going to sign this thing with you. Um, but I mean, I've never had a problem, on
Right.
as the consumer or the client. But
Because well, there's probably been a sense of comfort in knowing that this guy's in my corner. I've got we'll communicate regularly, and we'll discuss our options and all that kind of stuff. So you don't feel like you're out on an island when you're making the biggest purchase of your life. I just found it interesting that the old school traditional brokers resisted this because they were worried that the commission would be affected,
mhm.
that they wouldn't make as much money. So yeah, if you want to go to the next
Oh yeah.
slide, this is a little more in depth. So um, so I use for sale by owners as a I mention it here, not that it was part of anything, but it's the reason why people are thinking like, well, why am I paying a percentage on either side? A lot of for sale by owners, when they list a house themselves, they will put broker protected, which means we'll pay the buyer's agent's commission. So what they're looking to do is typically save. I don't think they really anticipate saving the full 6%, but they would offer like 3% to the. So they're looking to save 3% typically when they list themselves.
Mhm.
So most sellers choose for sale by owner instead of a realtor in order to save money in realtor commissions. But if your house could sell for 6% less if you didn't use an agent, uh, then you might not actually have money. Uh, you might not actually save money by avoiding a listing agent fee. Does that make sense? I mean, it's a common it's a common question that people ask, and the reason I say that is to establish the value of what the agent provides. So if you'll go to
Yeah,
the
this
next
girl
slide,
right here is an expert in the whole FISBO stuff.
she's done FISBOs.
Yeah, she sold her house in Reno with the help of a family friend. Um, I don't know the exact like transaction on the. I think she was saying like she has some negotiating. She did some pretty good negotiating with like the listing or the buyer's agent too,
Uh-huh.
because one buyer's agent was like, I want to offer you 20,000 less, and I want my full 3%. And she's like, well, I'm only going to give 2%. I'm not going to sell. I'm just going to rent it out at this price. And she was like, well, you're not going to get that. And I was like, you're going to get that. So later down the road, she actually ended up getting the amount that she wanted. And they came, I think they came to like table agreement, like for 2.5%. I'm not really sure, but yeah, with a little bit of help from her, with a family friend, yeah, she's able to do FISBO, so it's pretty cool. She lucked out.
Nice.
Yeah, definitely.
So what for sale by owner sellers have I keep saying what for sale by owner sellers save on commission, they often lose in terms of a lower sales price and other costs. So this was an interesting statistic, and this is where when the civil suit for paying buyer commission comes into play, and you're thinking, okay, well, as a listing agent, I tell my folks, so the way our paperwork is set up now, every state is different. Cities within the same state are also different. We've got a state contract, and then in the Midlands of South Carolina, where I live, we have our own contract. It's different than what Charleston or Greenville, South Carolina would provide. So When I represent a buyer, I say, my commission rate is 3%. We'll try to get that out of the purchase. We'll try to negotiate that out of the purchase. And in a lot of cases, they're offering some commission. If they don't offer 3%, then I can negotiate that with the buyer just to let them know that that's the way the current arrangement is done. When I work with a seller, I typically say, look, an average commission is 6%. That's the total commission. And this is where I didn't really understand why there was confusion unless people just weren't presenting the information properly. But if I say the total commission is 6%, I'll get into this a little bit in a later slide, but there shouldn't be, even if you're paying, even out of that, I say, all right, 6% goes to my brokerage. I don't make 6%. It goes to my brokerage. From there, my brokerage will pay the buyer's agent's brokerage 3% of that 6%. So it's really 6% to my brokerage, and the brokerage is paying the buyer's agent. So if you've negotiated that 6%, it's the same number, whether whether we employ a method to sell your house, which is what I consider offering co-broker commission or buyer's agent commission. It's still the same flat number. So if we're talking about 6%, well, if I list the house instead of you trying to sell it yourself, chances are, these are national numbers, but for sell by owner homes sell for 26 to 35% less on average than homes sold with the help of a real estate agent. So we can easily make up that commission in just the fact that I'm going to get it in front of more people, and just by sheer numbers, getting your house in front of more people should result in a better chance to sell your house and to sell it for top dollar.
Sure. So,
all right, next slide. I think these are just some stats. So this is where as we go through this, it feels like a regression to the first slides that I'm showing. Well, we don't want to pay the buyer's agent. We're kind of losing sight of the fact that it was 7% then, and the listing agent received the full commission because buyer agents didn't exist. So commission rate, average commission has actually come down from those early 1990 numbers. But these are statistics that you need to keep in mind as you go through this process. And it's the reason why I still say, our best opportunity to sell your house is to offer a commission to the buyer's agent. So 26% of sales are first-time home buyers. Pretty good chunk. Almost a third of sales are first-time home buyers. 86% of buyers purchase their home through a real estate agent. So we're talking about almost 90% of all transactions, the buyer uses an agent. So next slide, please, sir.
Oh.
All right. So the repercussions of that. So since this commission is how the buyer's agent gets paid, failing to offer a buyer's agent commission could shut you off to a huge pool of potential buyers. So, all right, Brad, well, why would that be the case? So buyers may balk at a seller who asks them to pay an additional 3% in commission, especially because buyers are already paying down payment. They're paying closing costs. Can you imagine? So now if almost 30% of transactions are first-time home buyers and they're navigating this market with 8% interest rates, and you
Mm-hmm.
say, by the way, that $300,000 house is going to cost you an additional, an additional $9,000 out of pocket. So suddenly you may not be able to, if required to pay buyer agent commissions, the buyer may no longer be able to afford that property.
Yeah.
So then you've lost a whole pool of potential buyers because of that. Now, keep in mind, in using an agent, you're going to, the numbers show that you're going to make more on the sale. And that's where this whole thing, there was a lot of misinformation, even in the trial. And I wish it was live so I could go back and watch it. I wish there was a full transcript. Most of what I've heard has just been, or what I've seen has just been snippets and people, different publications talking about, who spoke that day, but not really getting into what they discussed, because these are points that I would have certainly shared. If we get to the point, it's almost a regression to those early days in pre-buyer agency days where, you're, okay, well, you can't afford the 3%. And so then you just work directly. It doesn't mean the listing commission is going to be any less. Where you still negotiate, everything's negotiable.
Mm-hmm.
I still negotiate my rate, and I'm very clear. Our contract with both buyers and sellers lays out that, it's 6%. If I negotiate 6%, it's 6% of which I will pay up to 3% to the buyer's agent. So that's the way that's worded. So, could you say technically that the seller's paying it? I suppose, but if we do that, then technically the seller's paying for a lot of things. I pay out of pocket for professional photography. My job is to sell the house as quickly as I can for the most money that I can, using any ethical means I can to get you top dollar.
Mm-hmm.
So go ahead and go to the next slide now. But buyers could say, I use the scenario of, if I have a client who wants to look at a house and we set up the appointment, and then I see that, oh, they're offering 1% to me. So that means I have a conversation with the buyers that, hey, they're only offering 1% commission to my brokerage, for compensation to the buyer's agent. So that other 2% would, they could potentially be on the hook for. We might have to cancel that showing and say, like, hey, because my clients are having to, this additional cost added, where they can no longer afford the house. So there's just you still want to get it out in front of as many people as you possibly can in order to sell. The more people who know that your house is for sale, the better chance you have to sell it. And it's one of the things with, you had talked about, oh, well, I would always use an agent just to, like, wash my hands of it and know that it's, somebody's dedicated full time to it, because it can be a daunting task to market it and do all the things that are required to get it sold.
Yeah.
So my hot take in all of this is, offering a buyer agent commission is a marketing expense, just like professional photography or signage or ads. Those are all costs that I incur. I've already negotiated that 6%. So if an agent negotiates, say, a 6% total commission, shouldn't the agent be able to use whatever ethical means necessary to sell the property as quickly as possible for the most money possible? After all, that is our responsibility to our clients. So I would hate to see it go back to where we either buyers aren't represented, or they have to make decisions. Buyers have been beat up for how many years, Ferd? The last 2-3 years, they've been beat up pretty good with.
Gosh, I mean, you could say, I mean, when I really got into the business like 2015, 2016, I
Yeah.
used to hear, I mean, it's regional, right? I mean, like San Francisco, you probably say 2013 to 2015, that's when it started. And then they moved to Seattle. Well, they moved to Seattle, they start pumping up our rate. So we've really been, buyers have really been hit with the whole, I got to put 50,000 extra. I got to put, no inspection or waive appraisal, all that stuff
The
for
most,
almost a decade.
sacrifice. Yeah, they're sacrificing to put together the most appealing offer that they can, and
Mhm.
now we're going to slap them with this too. And it just seems like, it seems like we're there. There's some level of, the buyers aren't being considered, and in a time when it's affordability is an issue for a lot of buyers, and especially first time home buyers. I mean, they don't have the benefit of having a house to sell that has equity. Like if you're doing your first move up, so
Mhm.
you've lived in a house and you're going to buy a bigger house because your family's growing. They don't have First time home buyers don't have the benefit of that equity to lean on.
Mhm.
So they've had to save, they've had to make sacrifices to save for a down payment, and to calculate the closing costs and calculate the cost for inspections and all these costs that are associated. And it just, to me, it seems to make more sense that if the buyer's using an agent and they're going to make a greater percentage by by using that agent, that let's implement use this as a view it as a marketing tool, a marketing expense, as opposed to, well, why did I pay why did I pay their agent? Well, that's, it's, I negotiated that commission. What difference is it? Whatever I've implemented. I mean, I could have, would I have loved to have kept, had my brokerage have the 6%? Sure. But I would rather, I'd rather take that hit and let's have a satisfied client who gets their house sold for top dollar, who's going
Mhm.
to send me business in the future.
Sure.
And I think the best way to get there is to offer that. Now, what does that mean for us moving forward? I don't I think we're going to see some change in the wording. We might see some changes to the closing documents that will better illustrate what exactly is being done. Because I don't think there was one. I heard the story of one person who testified on one of the plaintiffs who testified. Her mother was a real estate agent,
Mhm.
and her kids were getting to the age where they were going to getting to a buy, getting ready to buy their first houses. So she said, I'm doing this for my kids so they can benefit in the future, and I think my mom would be really proud. And I'm like, your mom, I don't know what her real estate career was like, but she made a living for your family by doing this, and you think you think that you didn't have you don't have a problem with it then. But and how exactly does it benefit your children who are going to be buyers? Buyers weren't mentioned at all, because how many times do you purchase a house? If you're selling, yes, you're there were people who were part of this lawsuit. But how many houses did they buy where they didn't have to pay a commission because this structure was in place? There were a number of times where they were able to buy and not pay a commission. So it doesn't benefit she's not benefiting her kids by fighting for this, because her kids are going to get stuck with possibly around 3% more, have to pay 3% more because of this. So I it just felt like there was a lot of misinformation even in the trial itself. And really, I'd love to know, um, unless that attorney was doing this pro bono, they probably stand to make 20 to 50% of whatever the jury came back on. So
Mhm.
there's certainly some benefit to the attorney for bringing this. And once that verdict hit, they turned around and they're now suing National Association. The same attorney has brought a class action lawsuit against the National Association of Realtors, EXP, Berkshire Hathaway. I mean, just like now it's another round of real estate companies that are going to get hit again. So I've got a feeling this is going to go much higher, and it'll get, my answer is not that it's going to get strung out. We do need to figure out what we do moving forward. But for me, it's business as usual because I do provide a service, and I think I can have those conversations with my clients and say, this is, I wouldn't offer this if I didn't think this was the best opportunity to sell your house for top dollar. So as long as you know what your total commission is, I'm not sure if it really makes much difference what ethical means I use to get your house sold for top dollar. So what are your thoughts about that? Because you read those articles, like when somebody posted in the Discord, which is what brought about this whole segment, it was like, whoa, they're getting, they're gonna have to pay billions of dollars. What is your thought? Does what I've presented change your perspective at all from what you told me? You had been reading up on this a little bit while you were sipping margaritas in Mexico.
um, like it doesn't change the fact that I use a realtor regardless, just because of their service they provide. I think, like you said with the attorney, that stands to make the money, but like, who's really the victim that they're trying to say here? Is it the prospective first time home buyers? That was kind of my question. Like, yeah, I mean, like, who's really the plaintiff in this whole situation? Is it the consumer, or is it and who is the consumer? Is it the buyer or the seller? I guess the heart of it. And then I'll answer your question about what I feel about the fine.
Yeah, it's, well, the lawsuit was directed, it was sellers who had to pay buyer commissions.
Oh, okay.
So
So
yeah, their complaint was that, even though they used an agent and made 20 to 35% more on the sale of their house,
mhm.
their complaint was that they had to pay the buyer's agent, and they felt like I don't see where that there's collusion there, because everything is negotiable.
Well, I would say then, like, if one, it's a fine. So basically, I think it's just saying that you guys need to, change the wording on your documentation, and then we'll just, I mean, the industry's not going to change because, Redfin's been around for a long time, Zillow's been around for a long time, and the reason they were so successful was because they had these, these brokers that were like, we're not going to charge you the full 6%. We're only going to charge you 5%. And so that didn't really dissuade the Brads of the world from being realtors. It just was a different approach to the transaction, right? As far as the money, the $1.6 billion that is being, lost for, it's like, okay, well, the sellers that lost out on, quote unquote, lost out on that money, are they going to get a cut of it? Doubt it. I think what they should do, which is what they did for my side, and I think that helps out first time home buyers or sellers, whatever. You should put that money into a fund to help people either sell their home or buy a home. Whether it be a grant, whether it be some type of credit, tax wise, something like that. Because ultimately it's the consumer that's trying to be protected. It's really not, but basically it's yeah, I just, it's someone found a loophole that could have been exploited and they did it. And there was a complaint, but like the only real benefactor of it is the guy who, like you said, is making all the money from. But we don't know where the money's going to go to. The 1.6 billion. I can only see it being a good thing if it helps more people that aren't able to either sell or buy a house to allow them to buy a house, or it's going to wash out consumer, because like ultimately it's the consumers, that's just what I think about it. Other than that, like, it's not affecting you really. You're just going to keep selling houses the way you want to sell it. It's more of just like, you're like, hey, now I have to justify like my service even more than I already have before. It's like, that's just annoying, if anything.
The
And
value proposition, though, I mean, know your worth, know what you bring to the table,
mhm,
and it just seems like the loser in all of this is buyers, and it's the reason I shared the history of the buyer agency,
mhm,
because for these very reasons they implemented buyer agency to to protect them in these kind of lopsided deals that were happening.
mhm,
And there were, yeah, of course there were old school agents who were resistant to change, but it was something that probably, that definitely needed to be done. When you're making the biggest purchase of your life, you need to have somebody in your corner who is helping you make decisions. And a large part of my business, and maybe you experience this too, it's that part of they don't teach classes on the types of things that, making those phone calls and like talking people off the ledge, and just like, hey, look, what you're experiencing is normal. This happens all the time. You haven't bought a house in 10 years, so you wouldn't be privy to that, but I see it all the time. So you're in good hands, and you're in good company. It happened. This is normal. This is part of the process,
mhm.
and just helping people through that emotionally through that process can be, it can be kind of daunting. So it brought me to this quote on fair housing, because I think ultimately we've got to figure out how this doesn't hinder home buyers, and even more specifically first time home buyers. The pathway to housing should be fair and equitable to everyone, and access to affordable housing is the infrastructure people in our communities need to elevate families into the working class and the middle class. It is the foundation that helps people support their families and contribute to their economies. And it's kind of, it's a long way of saying what you said, where your path to wealth and prosperity is home ownership.
Really
And
is.
how do we provide that to people when interest rates are high and home prices are elevated, and there's, you got to pay over appraised value, and now you've got to pay an additional 3% or whatever your buyer's commission is. So we just need to still work towards affordable housing, and we were kind of feeling a hit even before this came down the pike. So yeah, it was a lot of a lot of information. I appreciate y'all sticking with us through it, but just I wanted to be as thorough as I could and kind of explain how it came about. I did not realize that buyer agency is a fairly young thing, but it was really interesting to kind of delve into that.
Good stuff, man. I want to thank everyone for watching. We had, I think, 9 at the height here, uh and we got 3 at the end mark here. I'm not sure about next week, but possibly I don't know, Thanksgiving. We'll work our schedules out and all that good stuff. But yeah, Brett, any closing thoughts before we say goodbye to the crew?
Thank you once again for joining us. We appreciate it more than you'll know. Just make sure you subscribe to that YouTube channel, and 75 subscribers. We're doing a giveaway, so help us spread the word on it.
Yeah, thanks again, everyone. And we'll see you next time.